Now that we've heard from the major players in consumer technology, what's happening with the personal computer upgrade cycle? Now, all year we've been hearing about how we're due for a wave of PC replacements. Now that we're 4 years removed from the last big upgrade cycle at the beginning of the pandemic. At the same time, we heard all about these new PCs with artificial intelligence functionality, how they'd be used once they've released, and, well, they've already started hitting the market. But over the last 6 months, Dell Technologies, HP Inc., and Best Buy, which we own for the Charitable Trust, have all come down dramatically from their highs in the spring and summer. Now, all three of those companies reported last Tuesday, and all three of their stocks, they got clubbed. Best Buy was down 4.9%. HP and Dell falling 11 and 12% the next day, respectively. Still, the stock market's judgment is not absolute. We need to check under the hood to figure out what's really happening with this PC refresh cycle and whether it's as consequential as the stocks seem to be saying. Let's take them one by one, starting with Best Buy. Before the quarter, we've been selling our stake in this one for the Charitable Trust, precisely because we were worried about the hype surrounding the AI PC thesis, which, by the way, candidly, we had put into ourselves, but it cooled on of late. And also because Lowe's and Home Depot have bad things to say about demand for big-ticket items, and those are Best Buy mainstays. Sure enough, Best Buy disappointed with top-bottom line miss, not to mention weaker than expected same-store sales. Management also cut their full-year forecast for 2025. They gave a discouraging outlook for same-store sales in the current quarter. CEO Corey Barry blamed general, and I'm going to quote this, macro uncertainty, purchase delays in anticipation of holiday season sales, and what she described as, quote, distraction during the run-up to the election, end quote. What a downer. Now, there was some good news. Barry disclosed the current quarter was off to a good start, with Best Buy same-store sales up roughly 5% through the first 3 weeks of November as the holiday promotions have kicked in. That news brought the stock off its lows last Tuesday morning, but it can only do so much. After all, Best Buy still guided for same-store sales to be flat to down 3% in the current quarter. The analysts expect them to be down just 0.3%. Doesn't drive what we've seen so far in November, though. Still, I want to focus on what Best Buy had to say about PC sales because that was more encouraging than the overall quarter. Computing and tablets were called out as some of the stronger categories, offset by weakness in appliances, home theaters, and gaming. The domestic computing and tablet categories together grew 5.2% versus last year, and laptops specifically were up 7%. Later on in the conference call, an analyst asked about what was specifically driving the good PC numbers, and management's answer was interesting. Jason Bonfink, Best Buy's senior EVP of Customer Offerings and Fulfillment, said that much of the PC demand was more, I'm going to quote, upgrade and replacement cycle, end quote, buying, rather than buying because of the new AI functionality. Bonfink explained that while Best Buy was, quote, excited about what's going to happen in the future with AI, end quote, they think it's a, quote, phased approach, end quote. And that theme will play out over time. Right now, the real driver is replacing PCs that have gotten too old. That does not interest me as much as the AI PC. In the end, as we told the CNBC Investing Club in a very long report, I am torn on Best Buy. The company could do better if long-term interest rates come down and the housing market improves. But I'm also aware of the current moment. I mean, especially with the threat of tariffs looming. In the end, after the quarter, Best Buy is too expensive for me to recommend up here. But at least they confirmed that the PC upgrade cycle is for real, even if it's not driven by machines with AI functionality, at least not yet. All right, how about the actual PC makers? All right, when HP reported, it delivered a decent enough set of numbers with solid guidance for the 2025 fiscal year. But the company also offered much lighter than expected earnings guidance for the current quarter, and management suggested that their 2025 earnings will be loaded toward the back half of the year. That didn't sit well with investors. It's the reason why HP stock sold off. Let's take on the main issue with the quarter. Now, when we spoke to CEO Enrico Lores on Mad Money, he said that softer margins for the company's PC segment, the big negative here, were caused by increased component costs, and those should continue into early next year. I won't tell you how to feel about that, but just know that the problem with HP is a cost issue. At the same time, HP's PC business is doing much better on the enterprise side, up 5%, and the consumer side down 14%. Now, HP emphasized that it's taking market share all over the world in the PC business, particularly in, quote, high value, end quote, categories, like commercial and the premium portion of the consumer market. Lores noted that HP's AI PC units were more than 15% of the company's shipments in the quarter, and they're apparently the number one player in the space. Now, when I spoke to Lores, I asked specifically about how we should square some of Best Buy's more positive, forward-looking commentary about AI PCs with HP's more guarded guidance, especially near term. He said basically that the benefit from sales of these products was more of a 2025 and 2026 story. Hence that. Finally, let's talk about Dell, a company I very much admire, which reported the same night as HP, posting a 10-cent earnings beat off a 205 basis, even as their sales were weaker than expected. The guidance for the current quarter was not so hot, though, and they cut their full-year forecast. That's why the stock got hit. But after reviewing the results, I really like how transparent Dell's management is being about its issues. In terms of the PC business, we saw a big disparity between commercial and consumer PC sales, just like with HP, except for Dell, it was much bigger. Their commercial business was up 3%. Consumer business was down a whopping 18%. Management says the PC refresh cycle is playing out more slowly than expected, but looking forward, they still believe it's going to come, likely next year, thanks to an aging installed base of computers and an end of support for Windows 10 late next year. More importantly, not in the PC world, Dell is the best partner NVIDIA has for the installation and running of the highest-end NVIDIA chips, like Blackwell. Blackwell is just now really beginning to ship in volume. And though that's not PCs, I think it will benefit Dell later on next year. Putting it all together, it's clear that the PC upgrade cycle is going more slowly than any of these companies would like. But is it a lost cause? No way. Once Microsoft pulls support for Windows 10, it's inevitable. Plus, we're already seeing pockets of strength here. Best Buy is moving a lot of laptops. HP and Dell are starting to do better on the enterprise side, even if the consumer's yet to catch up, which I do find worrisome. Here's the bottom line. These are all high-quality companies, and I'm inclined to give them the benefit of the doubt, especially Dell, which also has huge exposure to the red-hot AI server space and is not expensive. But the big AI-driven PC refresh cycle, it seems to be on hold, even though they're confident it'll play out. It sounds more like a normal upgrade cycle than anything revolutionary, which I found to be a tad disheartening, hence the sell in Best Buy. We have a small position still. Let's go and take some calls. Why don't we start with Doug in Michigan. Doug.
Hi, Jim. Hey, thanks for taking my call.
Oh, thank you for calling in. What's going on?
Hey, in April, I purchased 400 shares of Motorola, and I'm up about 43%. Do you think that it will keep up with this momentum throughout next year?
Okay, I'm glad you used the term momentum because I know the barcode side, I know the communication side, and I think the stock is overvalued at 36 times earnings, fewer forward numbers. That said, I'm not going to call it momentum. And Doug needs to know, there are so many companies that look just like this. They've had this incredible run. I can't call the top on them. I have no reason to call the top. I am saying I would be prudent and do what we did with Microsoft today if you're a member of the CNBC Investing Club. Let's go to Karen in Georgia. Karen.
Dr. Cramer, I want to know if you think the stock is hot to go now pre-earnings and where you see it going in the long term. IoT, Samsara.
I think this company is about to have a big earnings breakout, and I like it very much. When we had them on, I was incredibly impressed and thought, wow, I wish I had known about this company earlier. You've got a winner. How about we go to Bernie in Arizona, please? Bernie.
Hey, Jim. Hey, how do we get Saquon back in New York? Do you know how to do that?
How do we get back in New York? I think that after what I saw in that TV show, good luck. Not going to happen.
Yeah, not going to happen. Hey, I got a question.
But they should never let him go to Philadelphia. That was really the mistake, because now we all have to listen to MVP when he plays up there. What's going on?
That's true. Hey, question for you. So I bought ARM a long time ago.
Okay.
I think as it came out, overall my returns are probably 150%. So I'm really happy with that. Thank you for that. So the question I have is, how does ARM's progress look like here over the course of the next few years? Do I hold it? Is it still a potential buy with everything going around AI right now?
I think that you're going to get a break here. I think that ARM, wherever it competes with Intel, and it's going to be competing with Intel, I think that's going to be a win for you, a W, as we would say. I think that, look, ARM is not Saquon. It's more like after last night, King Henry. Nice number 2. The AI-driven PC refresh cycle seems to be going a little more slowly than everyone expected, including yours truly. Not a lost cause, but it does look more like just a normal upgrade cycle rather than anything revolutionary. You need to know that. All right, much more Mad Money ahead, including my exclusive with CrowdStrike amid a volatile environment for cybersecurity. Plus, fresh off news of Intel CEO shakeup, I'm going to give you my take on Pat Gelsinger's legacy and what the chip company faces going forward. And you don't want to miss that. And all your calls rapid fire in tonight's edition of the Lightning Round, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.